Hi, welcome to the Market Alert for Tuesday, the 5th of January 2020. So a huge amount to get through today. I've divided it into two parts. What I'm going to do in the first part from this point forward is talk about the analysis of what to expect today during today's session. And if you want to have a look in detail, bar by bar, then that will be in part two. So when you get to the end of part one, if that's enough, then you got a heads up for today, that's fine. And the news, but if not, if you want to look at yesterday inside of the trades, then go to part two. Right, so yesterday we kicked off with melt up in global stocks. Bitcoin hit all-time high to start 2021 as dollar implosion continued. Of course, this soon changed as we went through the day. Cryptos continued to jump, but stocks dump as everything rally fades early in 2021. And it's certainly going to, as I come to that in just a moment. 2020 was a snack, 2021 is the main course. Now, these were the headlines yesterday, and then at 5 o'clock this morning I was looking through, getting ready to record, and I came across this snippet, which I found very interesting. Now, I don't really want to talk about the virus, but interestingly enough, the FDA admits PCR test give false positive results, prepare ground for Biden to crush case-demic, because that's what we've got at the moment. It is a case-demic, it's not a death-demic by any means. It's using this PCR test, and I'm not an expert in this. All I know is that they're running more cycles than they should, which is what they allude to in this article. So if they change that, it removes the false positives. As it says here, the change will only eliminate false positives, but most Americans won't know that. So why am I talking about this? Well, very simple, because yesterday we've got these sort of headlines. 2020 was the snack, 21 main course, and then we see stocks dump as everything rally fades early in 2021. So if you can get rid of this for Biden, this will keep the stock market moving to the upside. Seems slightly obscure to throw this into a financial news site, but if you look a bit closely and think about it, this would make perfect sense, because now we're just entering a 6-week lockdown in the UK. This is going to absolutely crush the hospitality industry, let alone all of the other tens of thousands of businesses. This is bad news for the stock market, make no bones about that. So how are they going to keep the illusion alive? How are they going to keep the markets levitated? Easy. You change that. You make it look like this. The 6 weeks of lockdowns are actually working, because you change the cycles on the PCR test, and you get you remove the false positives. Genius, and that helps to keep the market afloat. So that's one theory. The second theory, of course, is that people will see straight through this and say, do you know what? The economy is really going to get crushed. And all it needs is Biden to come in on the 20th of January and say, look, we're going to lock down for 100 days, and that will screw it completely. So just something to keep in mind here is these little snippets that you see, and you think you could just, gloss over them, pass by them, and then you realise, actually, what if they actually did change this? The case-demic would go off, fall off a cliff. It would no longer be an issue. And don't forget, Biden's part of the World Economic Forum of the Build Back Better slogan and mantra as well. So again, you start fitting the pieces together. What can they do is the question. What can they do to keep the stock market on the highs? And of course, that is it. Is make it look as if the lockdowns have worked. The whole of this an exercise to wait till Biden gets in, and then once he gets in, magically, as it says here, things start to fall away. When I mean things, I mean the PCR tests are less positive. Interesting. So we'll see. Let's have a look at where we are from yesterday. Let's start with the daily chart in the DAX, and you can see that we have some potential weakness, but not a major amount of selling compared to the buying that we saw on Thursday of last week. We're back above the 5-bar moving average at the moment as well. So let me just widen this out. Yesterday I thought we were going to start heading south, but not to be the case. We did close below the 5-bar moving average, but overnight prices are moving to the upside. And we put in a new all-time high yesterday at 13,918 as well. So the only thing I can do here, because I don't have any points to draw off, but it'd be interesting to see what strength the market's got trading back up to these highs. I'm just going to remove this high, trading back up to this high. And if you select the fib retracement tool and click twice on the high, you can see that it will draw up the fibs on one price bar there. You see how you can then see what the strength is in the market as prices move back to the upside there. Just something that I do when I can't actually draw from a high to a low to project back, because it's not possible to do, because it is both the high and the low there. So that's what I'm doing on the upside. On the downside, just in case the weakness continues, first of all, we've got to take out yesterday's low, but other than that, then we go from this low to this high, and they would be the downside targets that I'm looking at as well there. So we've got all of these down to the low back in December. So let's have a look at the 2-minute chart, see where we are in the bigger picture. Yesterday we came through the lines that I drew on. I'm just going to remove these. They're in part 2. You'll see how they worked really well yesterday. Let's just scrunch everything up so we can see where we are. So below the DP at the moment, just above the 200 MA. We're quite away from the low, and we're a long way from the high, which is going to be up here. That's what we're looking at here. So we've got a lot of potential on the upside. If prices move to the upside there, you can see we've got 200 points up to the high and down to the low. At the moment we're 100 points down to there as well, so depending on how the market trades once it opens at 7 a.m. So there's the bigger picture. At the moment, not a lot happening, but again, you must know where you are, what the profit potential is to the high and the low, because you want to keep the bull market going. You've got to get through the previous day's highs, and you want to try and hold the weakness at the previous day's low, which is what they managed to do yesterday, and brought it off the low there. So let's have a look at the Dow, which we didn't look at yesterday. Similar picture, still on the highs, made a new all-time high during the overnight market yesterday, 30,801, so nearly up 1,000 points during the last month, not even that, last few weeks, up 1,000 points, but obviously giving some of this back yesterday as prices headed back to the 20-bar moving average, which takes us to the implied volatility. This was sitting at 1810. Yesterday we moved up to 20.87. Like I say, if they can get rid of this so-called case-demic, then we'll see the stock market move up to the highs. But if Biden goes all in and follows the rest of the world at the moment, well, UK, Wales, Scotland and Europe, then you will see part 2 turn up like we had last February with the stock market. And we've got the potential to do this because we're so low down in the implied volatility. It's what the agenda is, but we can see that the options are cheap on the downside. It's just a matter of whether they will let it go or not. And like I say, for me, this is a very interesting news item. Will they actually use this in order to try and make it look as if the virus is exiting stage left and things are going to improve? So just depends what the agenda is. And today, news-wise, before I conclude part 1, we've just got an OPEC meeting all day, and we've got the ISM manufacturing PMI. So the market's got to make its own direction. Okay, that's it for part 1. I will see you in part 2 if you're interested in seeing the trades taken apart from yesterday in the price action of what was a very interesting day. Okay, so after completing the market alert for yesterday, you can see that I've got the high drawn in here from Thursday of last week, and the market had actually gone above this just as I was editing and uploading the market alert, and then you can see prices take off there to the upside as soon as the futures opened at 7 a.m. I'm just going to fast forward through this futures trade, and there you can see prices heading up a good 80 points before they actually make their way back to find some sort of support there at the BRN. So price is up up over 100 points from the high of Thursday up towards the minor BRN there. And then it's time to open the cash market, and guess what? We shoot up again. But this stopped the market in its tracks. This is a new all-time high as well. And you can see the volume there coming into the market. The price is stopping. And then you'll see the selling there through the next few minutes, all the way back to the 20-bar moving average, where prices find some support and then start to move back to the upside and then just trade sideways. So I'm going to fast forward. Again, you can see some potential weakness there in this bar. Price is closing back below the 5-bar moving average, back down towards the BRN, and then we have a sell signal. And prices move lower, and then I redraw the trade lines back on. I've also drawn in the low from here, because this is where the market found some support before it moved up and then ran into some potential weakness there before moving lower. So I'm going to fast forward through this. I've moved the stop to break even. Prices continue to move lower. We've got the BRN to contend with. The market goes through this. We then see the selling coming into the market, and then prices starting to trade sideways, which you then see the trade being left there for 50 odd points, and then prices find some support trading sideways. And you can see the volume has dropped off significantly and then starts to move to the upside. At this point, I'm just going to wind it back to the right place. There's a lot of data in here, which is making it difficult to find the relevant bits that I want. Let me just come back a bit. There we go. I was having a look at the daily chart at this point, and you can see I've already marked up the new all-time high at 918 for future reference during the trading day. So then it was a case of the market making its way back. We had a potential buy signal, but it took a moment or two to actually break to the upside, particularly this bar here, very narrow range, high volume compared to the previous bar's range and volume. So it needed to take this out, but it did stay above the 5-bar moving average and the BRN. So again, I'm just going to fast forward through this, just so that you can see. And eventually we make a move to the upside, and then we start to see a bit of volume coming into the market, trading up to the BRN there. And then of course you've got, let me just move this back. Then you've got some selling pressure coming into the market, and that's clear to see. You've got this narrower range in this bar compared to the buying bar here, and the volume is greater. So there's some resistance here. And as the markets come back from this high to this low, I've just drawn in some fibs to see where the market's likely to find some resistance. I drew them from here and from here, but used the same low here. So there's two sets of fibs here with the resistance, and you can see the doubles that we've got here and here. I think, no, there's just the one there. So we've got double resistance here. In the fibs. So as the market moves up, you'll see me come out of this trade, and the reason being is quite simply I had a hospital appointment, so I had to leave the desk, which is why you'll see the fibs stay on the chart, and then even through the news, because I wasn't here, didn't get back for an hour and a half after this. But the market trading up to the 89% and then finding some resistance before prices then had a go, but didn't make any great strides. And then as we got into the afternoon, it was selling from the off, really. The selling took place just before, and then straight away we're through the 200 bar. We've got the 20 bar, the 5 bar, and everything's starting to move to the south side there. As the Dow opened and sold off, and apparently this was due to the prospect of Biden getting in, which is an interesting one. But then, given the fact that they printed 1.4 trillion last week to give every household or every adult earning under $75,000, $2,000 each and $600 per child, then it's hardly surprising, is it, to see that the market's going to sell off when Biden gets in, because he's going to devalue the dollar by continuing to print large tranches of money. So here we can see that the DAX ADX moving lower, following the Dow. Very narrow bar here. Not any selling pressure, but an interesting bar nonetheless. And then immediately we get a reversal in this bar where the profit taking comes in, and the volume is actually less. So it's an interesting one how they managed just to run this back. And then here you will see that we've got a spike in the volume there as prices now struggle to hold, and we've got the 220 and the 5 below. So when the market closes back below the 5 bar moving average, there you'll see prices starting to move lower, and I'm just moving the fibs as prices move down. And I've also drawn in the low where we saw the short covering coming in and profit taking in the first move to the downside. And then again, you can see how they bought back off this support here. But again, this was short-lived as we got to the BRN. The market got stuck in the 78% from this high, drawn back to this low, and that shows you where this is as well. We've also got the low where we saw the first part of the selling and the market stopping. So all I was doing is just seeing what strength the market had got here between the two sets of fibs. And also, what's important, you can see this bar closing below the 5 bar moving average along with this one as well. And this is the last time the market closed above us. The last time the market had any chance of closing back above. So I was just drawing in these fibs, and then we took out that support at 831. And then it was just a case of the market continuing to move lower, not coming anywhere near closing above the 5 bar moving average until late on in the afternoon, when we see the market trade back down to the high that I'd marked up in yesterday's market alert. So prices trade down to this, and look how they bounce off this. You'll see it come back again and bounce back off again, buying pressure inside of this bar, tiny bar, where the volume is greater than the previous bar's range and volume. So prices then trade sideways and eventually succumb to the pressure in the market. So what I did, I continued to watch this and had a look at the daily chart. And if I can wind this back, and let me see if I can do this for you. What I did is have a look at the daily chart, and then what I've done here, let me just come back, is picked up this low from Thursday's low of last week, and then what I'm doing is transposing this and moving it lower into the chart so I can see where that low is from the daily chart, just to see if the market was going to trade down to it. And then sure enough, after a bit of a pullback of 100 points, the market managed to make its way down to the low of Thursday there before starting to come back once more. So no surprise there. And then you'll see the daily chart there. And this was after the 4 p.m. cut-off. It was just interesting to watch. But certainly some weakness around during yesterday's trading session there for sure. So this ends the review for yesterday's trades and market activity, and concludes the market alert as well. So with that, as ever, thanks for watching. See you in the next one.